This is the phase where too much trading ruins people, because fundamentally the structure of the market has not changed. This here is the stablecoin market cap over time, and there seems to be an invisible ceiling at around 290 billion. Here we've got the altcoin market. This is the others market cap, so all altcoins that are not in the top 10. This has an invisible ceiling at 460 billion. When we look at all cryptocurrencies, but we exclude Bitcoin, Ethereum and the stable coins, then that ceiling seems to be at 950 billion. Isn't that interesting? This chart is more than 10 years of data, yet we have seen for multiple years no more growth. Let's compare the entire altcoin market with just the smaller alts. Then we're getting this chart over here. So this is now total 3ES, the altcoin market, except Bitcoin, Ethereum and the stablecoins, relative to the altcoin market that does not include the top 10. In other words, the big altcoins tended to outperform the broader altcoin market up until the end of 2018. And then the smaller altcoins started rallying. Since March of 2024, the bigger altcoins, so the top 10, tend to do better again. With the recent volatility in the market, that trend might be turning around though. Have a look at the bottom. This is the Bitcoin price. So isn't it interesting how the bigger altcoins tended to perform the best during the ICO bubble? And they also tended to outperform the smaller altcoins during the crash. Only after we have bottomed out, when Bitcoin went from 20k all the way to 3.5k, only at the end of the bear market did the small alts suddenly outperform again. So there's not necessarily a connection between whether or not we are in a bull market or in a bear market and the outperformance of the bigger alts relative to the smaller alts. And I find this quite fascinating, and here's why. The popular narrative is that the smaller altcoins tend to just be more risky than the bigger altcoins, and they tend to move more in price whenever we go up or down. But that's not necessarily true. The bigger altcoins can actually still outperform both in a bull market and in a bear market. Really, the small altcoins have their own cycles. It seems like they're not directly, at least in terms of relative performance, attached to the general ups and downs of crypto and of Bitcoin. Check this out. This is the stablecoin market cap relative to the smaller altcoin market. So the altcoins that are not in the top 10, it looks like the stablecoin market tends to grow faster than the smaller altcoin market over the years. There is some volatility, there are some potential trading ranges, and the small altcoins might be, relatively speaking, cheap, because if this is going down, it means the altcoin market is growing faster than the stablecoin market. But it tells us that crypto really moved from just being a speculative asset class to actually a system to transfer value. And that value transfer, all those payments that are backed by the stablecoins, they are not necessarily driven only by token buying and selling. They might be driven by regular commerce. The stablecoin market cap also tended to grow faster than Bitcoin up until the end of 2022. Then Bitcoin outperformed, but now that's turning around again since the end of 2024. Have a look at the Bitcoin price during the same time. When Bitcoin is in a clear bull market, it tends to now grow faster than the stablecoin market cap, and vice versa. When it's in a bear market, when it tends to decline, it tends to contract faster than the stablecoin market cap. This was not always the case. During prior bull runs, so not the one in 2023 and 2024, but during prior bull runs, for example, in 2019, 2020, 2021, and also in 2016, 17, and 18, the stablecoin market cap actually grew faster than the Bitcoin price. So it looks like we have also reached a certain saturation point for the stablecoin market cap. At least the growth isn't as aggressive anymore as it used to be. It used to outgrow Bitcoin even during bull markets. Now that's not the case anymore. The bull markets in Bitcoin aren't even as quick anymore as they used to be, right? Bitcoin tended to appreciate much faster. But even the muted growth in the recent past is strong enough to outpace the stablecoin expansion. And so the fundamental question is, how can we use this data to potentially time the market? I just like to look at the stablecoin market cap. How many US dollars, so USDC, USDT, DAI, BUSD are currently floating? And how does this relate to the Bitcoin price or to crypto prices in general? This here is the stablecoin market cap over the last 6 months. And we have not seen a lot of growth in the last 4 months. Prior to October of last year, we had a very quick stablecoin expansion. Money was flowing into the space since October of 2023. People were depositing their hard-earned fiat currency to centralized exchanges that then sent this over to stablecoin custodians that then used the fiat currency to buy government bonds, and at the same time they created stablecoins on-chain. And we can see the on-chain creation in this chart. But since October of last year, there's no more net creation. And interestingly enough, that's also the exact point in time where Bitcoin started struggling. So isn't that fascinating? We've seen this massive crash, 50%, while there was no more inflows into the market, and now we are getting a bounce. But will that bounce be sustainable? Or will it be a dead cat bounce? Will we potentially continue on our way down? The stablecoin market cap suggests that probably the current bearish momentum continues. We still don't see any significant inflows. We can also have a look at how much of the entire crypto market cap is currently in stablecoins. When a lot of crypto is currently in stables, then of course the market is very fearful. Then people just want to be out of price action. That's what we see in this chart here. How much of all of crypto is currently in stablecoins? This tended to peak at 16%. So another potential glass ceiling similar to the other glass ceilings we have looked at the beginning of this video. And there is an inverse correlation here. So when the stablecoin dominance is high, crypto prices are low. So at the bottom again, we see Bitcoin. When the stablecoin dominance is low, then the crypto prices tend to be high. So that's when the market is fully risk on. With the current sell-off, we have seen the stablecoin dominance going up. The market got more fearful. And if there are no more inflows, then the bearish momentum is likely going to continue. And we might see a bit of a relief rally to then continue the bear market. That's what I believe is the most likely scenario. What I find fascinating is just how bad the altcoins are doing. This is the performance in the last year. And just have a look at how poorly some of those altcoins did. Minus 84%, minus 95% even over here. Many minus 80s as well. And the others dominance, the measure of how much of all of crypto is currently in the altcoins that are not in the top 10, that's going down since the beginning of 2022. The altcoins have underperformed on average by 62%. Now this is only measured in market cap. And there is a strong distinction to be made here because market cap developments are very different from price developments. Here is what I mean. This is how many new tokens get unlocked every single week, at least for the tokens that have been tracked on Tokenomics.ai. This tends to be close to 1 billion of additional potential sell pressure. So early investors, venture capitalists, they get tokens that they can unload. The team, they get tokens that they can then sell. There's always a party that gets those new tokens, and that might lead to additional supply, depressing the price. Really, the reason for this are people like this, Andreessen Horowitz, or like this, Sam Altman. On the topic of Sam Altman, right, the founder of OpenAI, he's also supporting a project called WorldCoin. This is the number of WorldCoin tokens over time. And of course, developers and investors get more and more tokens unlocked every single month. And so this is then what that means. Just have a look at the following 2 data points. So we've got the WorldCoin price close to $10 over here. It lost 95% of its value. It's currently at 40 cents. Have a look at the same data point in terms of market caps. That was at 1.4 billion and is now at 1.3 billion. So the market cap has barely changed. The market cap maybe went down by 25% or so. The price went down by 95%. That difference is token dilution. That difference is payouts by the Andreessen Horowitz and Sam Altmans of this world. That's why the picture looks the way it does. And so there are two potential ways to deal with this, right? We can just forget about the altcoins altogether because it's a rigged game, or we can try to take this market structure to our advantages. We can bet on falling prices of altcoins, and that's what I've been doing for the last 5 years. Here is my monthly outperformance over buying and holding Bitcoin over the last 5.5 years, roughly. The dotted line here, that's the 12-month moving average. So we are now close to an all-time high in terms of 12-month outperformance versus Bitcoin. And that's then my portfolio. That also includes dollar cost averaging. So that's a combination of saving money and outperformance. The outperformance over here is, by the way, 2.3% per month if we average out all of those data points. And so I started a copy trading pool last year as well. Bitcoin during the time period lost 25%. We made 17.3%. And so there's another copy trading pool this year, 2026. It's described over here, the relative valuation altcoin trading. It's running on a platform called Hyperliquid. 10% of the gains are profit share. There's a 5% deposit tax. And there's also other strategies that you can take advantage of. For example, here, the Ethereum trend following. Over here, the Bitcoin trend following. Here's our performance for Bitcoin trend following. It's currently got an APR of 55%. And here's our performance for the Ethereum moving average vault. It made 40% so far, and it's the best performing trading strategy on the entire platform. Ethereum trend following is on Gravity. So those are all our automated copy trading capital pools. This is all available to the premium members of this channel. Premium is available for $125 per month. You can simply just deposit on the first month, and if you don't like the content, if you don't like the additional videos, etc., you can actually unregister after 1 month and just keep your capital running. If you want to save some money, you can also sign up for the yearly membership. Then you get $250 for free, and then you can also include the relative valuation trading capital pool. So the capital pool where we bet on falling altcoins, that's only available to the annual members. The other two trend following strategies, they are available for all members, so also for monthly subscribers. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers!